This is the Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. You are listening to and watching the Financial Survival Network. I'm Kerry Lutz. Today is 2/22/21. Make what you want of it. That is 4 2s. Tomorrow will be 5 2s. And if you add them all together, I guess you come up with 10, and you add 1 and 0 and you get 1. So tomorrow is going to be a great day, especially if you're short. But we'll talk about that more later. In the meantime, market, parabolic top, blow off top, distribution top. It already is showing signs that distribution is taking place. How much longer can the good times roll on when the real world is going to hell in a handbasket? Like to get your opinion. Why don't you send us an email to kl@kerrylutz.com. Right now, Dollar Collapses John Rubino is with us. And John, my goodness, Michael Burry, the guy from The Big Short, he was slightly autistic, I guess, or Asperger's, something like that. Seems like a lot of hedge fund guys fall into that category, is calling for Weimar type currency collapse in the good old US of A.
Hey, Kerry. No, with hedge fund guys, you meant to say sociopath, not Asperger's.
Well, a combination of the two. Sometimes you can't tell what you're dealing with because there's so far out there.
Yeah. But Michael Burry is, if you saw him in The Big Short, you know he's cool, and a very smart investor. And yeah, he's coming out with warnings about rising inflation, maybe dramatically rising, which makes sense. I mean, we're increasing the money supply by 20 or 30% a year. The M1 money supply went up by 70% in 2020, which means we're just flooding the system with new cash, and we're keeping at it. You know, the last stimulus checks haven't even gone out yet, and we're already seeing blow off top in all kinds of different asset classes. So it's not a surprise to hear smart people talking about the possibility of rising inflation going forward. But can you imagine what that would do? That's a death spiral scenario for most of the developed world, because so inflation starts to pick up, which spooks everybody who might or might not be buying bonds. It causes them to demand higher interest rates for their investment money, and that crashes the stock market. And the currencies start to, that's the kind of stuff that we would see if inflation started to pick up, and there's no real way to fix any of that, because you can't stop rising inflation with easier money. And easy money is really the only tool that we have. We can't tighten, because that would crash the leverage speculating community and consumers and governments around the world. Nobody can handle higher interest rates. So that's kind of the end of the system if inflation starts to pick up. And now you've got smart guys calling for rising inflation. So that makes the next few years extremely interesting in the Chinese curse sense, because there's no fix if something like that happens.
Yeah, exactly. And, think about what that will do to real estate. Man, you get back to 5, 7, 8, 10% interest rates. How much is that house going to sell for that now is selling at an inflated price because it's gone up 50% since the crash? I mean, we're talking serious decline in real estate and all the allied industries, your Home Depots and all that. It's going to be devastating for the real economy.
So basically, the thing to watch now going forward is the 10-year Treasury bond, because that's the interest rate that a bunch of other things key off of. Like, that's where you get your mortgage rate, among many other things. And if that keeps on going up, it literally is game over for this system. But, even in the absence of soaring inflation, this feels like a blow off top in the investment markets right now, because you're seeing everything spike. You mentioned houses. Home prices went up 14% last year, which was a recession year in the US. And that that doesn't sound like much in the context of Apple and Amazon price movements or Bitcoin, God forbid. But remember that houses are leveraged assets. So if you put down 20% on a purchase mortgage, and the house goes up by 14% in 1 year, that means you made a 70% gain on the money you actually put at risk, which was your down payment. So a 14% jump in house prices is an absolute blow off top number. You can't get that year after year. You get it one time and it pushes house prices into unmanageable territory, and then it comes back down. So that's one sign of many that we're in a blow off top. And there are others. I'll go through a few that are really briefly, but the put call ratio, which is the basically the sentiment in the options market, is wildly bullish right now. Hardly anybody's buying puts, which are bets that stocks are going to go down, and everybody's buying calls, which are bets that stocks are going to go up. And the put call ratio now is at its most extreme since 2000, which was right before the tech stock bubble burst. Small businesses are leveraged to the hilt right now. This is something you don't hear much about, but the debt to EBITDA, which is a broad measure of cash flow for the small business community, as measured by the Russell 2000 stock index, is way higher than it's ever been before. In other words, small businesses are more highly leveraged than they've ever been before, which is usually a bad sign, because the more leverage small businesses take on, the greater their propensity to crash and burn becomes. And they're there now. They've never been this highly leveraged. Okay, there are a couple more, but I forget what they were. But anyhow, the point is that all of this is happening for the same reason that people still buy Italian bonds in Europe, which is that Germany, if it wants the Eurozone to stay together, has to back up everybody else's assets. So when you buy an Italian bond, you're really buying a German bond, which makes sense, and you want to buy those bonds then, because German bonds are probably going to pay you back and give you your principal back and everything. And it's the same thing in the US now with all of our different asset classes. We're all assuming a gigantic bailout going forward, which means that house that you bought, even though it was up 14% in the last year, and the muni bonds that you bought, and the tech stocks, and it goes on and on. All of these things are really US government assets in your mind when you're buying them now, because you assume that sector is going to be bailed out. And, since the government has a printing press, it can not just bail those assets out, but can force their prices up by creating a bunch of new money and directing it that way. So you're not buying Google stock or Tesla stock anymore, and you're not buying muni bonds as an obligation for Illinois or California or somebody like that anymore. You're buying those things, assuming that you're buying Treasury bonds, basically, something that the government is going to make good on with as much newly created currency as needed, which means that we're deeply into the greater fool theory territory now. And we, taxpayers and savers, are the greater fool in this scenario, because we're on the hook for whatever the government does. It doesn't have money of its own. And when it bails out some incompetent corporation, that means we bought that corporation, taxpayers. And so we are the greater fools in this scenario. And I think it's going to come home to roost pretty soon. We're going to figure that out when inflation picks up, and that's when everything hits the fan.
Agreed. Hey, well, they had the hearing on Capitol Hill, and Mad Maxine Waters basically was shocked to find out that their stock market is risky and investors can lose money, and kind of floated the idea that the government should underwrite all shareholder losses in the market. I mean,
in effect, we've been doing that ever since the Great Recession. We've been creating enough money to bail out everybody who bought stocks in 2007, and it's succeeded brilliantly. But you're right. A lot of the people in government don't understand how the economy works, because they are lawyers or, some other kind of thing that has nothing to do with wealth creation. And they spend their days trying to figure out how to write laws that are as coercive as possible, and that treat the private sector like a big ATM machine, which is where you go to get your cash to finance all your ideas. So yeah, they have no idea how a private sector wealth creating economy works. And when it breaks, when they break it, they will have no idea that they even broke it, and absolutely no idea how to fix it, other than throwing easy money at this stuff. So that's the story of the next few years. You know, things are going to break. We're going to try to bail them out with newly created currency. And then we'll see whether that causes inflation or a falling currency price on the foreign exchange markets or whatever. You know, if it causes some unintended consequences that the government doesn't know how to handle, then again, game over. And maybe all of these things were bad buys to begin with. You know, maybe owning an asset that you expect to be bailed out turns out not to be a good idea after all, which would be poetic justice, I think. You know, that's the kind of lesson we all need to learn at some time in our lives. And I think a lot of people are going to learn that lesson later in life than they would like in the next few years.
But you do know that like the big guys will get out just in time, and the little guys are the ones who are going to really get screwed here, right?
The pension funds, Kerry, you know, those are the ones that are really getting screwed because they're obligated to invest the money that comes in. And they need income. You know, they need part of their portfolio to be invested in fixed income, which generates a cash flow for them. And all that's left now is junk bonds, which is why junk bond yields are the lowest ever. You know, if you want to buy a portfolio of junk bonds, you're only going to get like a 4% yield, which used to be what you got in a 5-year Treasury bond not that long ago.
Yeah, it's complete and utter madness. I mean, we've kind of crossed the Rubicon here. When they started buying unlimited purchases of corporate bonds, God only knows what the Fed's portfolio of doggy corporate bonds look like, John, and how little they're yielding and how little they're really worth.
Well, see that again, that's why you would buy a junk bond now. If you didn't have to, if you're a bond mutual fund or a pension fund, you have no choice but to buy those bonds because that's the only thing that pays anything. But if you were just a regular, you know, investor with a lot of choices and you went out and bought junk bonds, it would be on the assumption that the government was going to bail those bonds out by buying them. You know, the Fed will create $1 trillion and buy up the junk bond sector. And so you make out, you sell your junk bonds to the government for a slight premium. And in the meantime, you collect the interest, which is much higher than other forms of interest out there. So that's your play. And it's kind of, you know, you're forced into it. I get that, but it's a despicable way for the market to work.
Really is. It really is. And they were it was never intended to work this way, you know? It really wasn't.
No, it really wasn't. The, you know, the idea, it was within our lifetimes that we had mostly free markets.
Yeah.
And that's all gone now.
Yeah. Yeah. Well, hey, little things like capitalism, free markets, and you know, entrepreneurial risk seem to be very out of style these days, John.
Yeah. Hey, Kerry, do we have time to talk about Texas?
Yes, please.
We got to do that. So I have a series on dollarclaps.com titled "Welcome to the Third World," and it talks about all the ways that that what used to work in the U.S. doesn't work anymore because we're going broke. So we can no longer manage the big systems like we used to, and our what we thought of as our birthright lifestyles as Americans are really starting to change in fundamental ways. And you know, recently that article series has focused on California because California is just crashing and burning in so many different ways, and everybody's moving from California to Texas. Because Texas is the state that works, right? It has, you know, pro-business taxes and regulation, and it's got a you know, a respect for personal freedom, and that's the place you want to be if you want to run a business, or if you just want to live like Americans used to think it was normal to live. So everybody's moving there, but maybe not for a while now. It turns out Texas can't even manage their electrical grid.
Yeah.
And they got some winter weather that would be laughed at by somebody in Massachusetts, but for Texas it was fairly extreme. But it just shut down their power grid because they apparently didn't winterize it, or they have too many windmills, or their natural gas turbines aren't connected to the grid the way it should be. Some arcane thing like that, which basically cooks down to they just screwed up, and they screwed up in a potentially catastrophic way. People are freezing to death. Hundreds of thousands of people still to this day, it's been a week, they still don't have drinking water. So all of a sudden, we can't even count on Texas to be run right. And instead of this isn't just schadenfreude. This is very important from an investor standpoint, because the dollar is the world's reserve currency, and it gives us the ability to do all kinds of things that a regular country can't do, because we can just create this paper or these electronic impulses, send them out into the world, and people give us real stuff. But a lot of that is based on the fact that we're good, that we're good at managing a big economy. We don't take on too much debt and crash our currency, and we don't have civil unrest, and our elections are clean and fair, and all that stuff. Well, in the last decade, none of that's been true. So why would other people in the world, seeing this, think the dollar is a safe haven asset, right? Because it depends on our competence. And we're displaying day after day and month after month that we're not very competent anymore as a society. Yeah, and so this is going to feed back into the financial markets big time if it keeps up.
Yeah, could not agree with you more, John. And hey, that is it for now. But make sure you go to dollarcollapse.com, Financial Survival Network. Sign up for both our newsletters. We will be back next Monday with more good news and cheer. And keep thinking about precious metals. We didn't even talk about that, John, but they're up dramatically today. And they really are displaying good relative strength and sticking power, staying power. They're really at support now. And hey, it's just a matter of time before they catch up with Bitcoin, because eventually the options that you have in this world to protect your assets are going to become very obvious, and you're going to have to do something about it. On that note, John, have a great week, and we'll see you next Monday.
Thanks, Kerry. See ya.
The Financial Survival Network.